All right, guys, we got some more material to go over here. Um, this we're focusing on different different reporting requirements for state and local governments. Um, the other material for modified accrual accounting, fund accounting, um, that type of stuff. Just knowing the difference between governmental funds, proprietary funds, fiduciary funds. That is really, at least I feel like that'll be tested throughout in all these different quizzes that I give you. And that's really what is most heavily tested on the CPA exam too. This here is important material. It's also tested, but not as heavily as the other material. So yeah, basically we're just going to go through and look at all the reporting requirements. Don't get overwhelmed with the details of the different financial statements. Instead, just focus more on the format and kind of some specific things that I'll highlight. Like you won't be required to prepare financial statements for governments. And so, yeah, just kind of focus more on the requirements. So I'll try and highlight what you should really focus on. Okay, let's get going. All right. Okay, so remember, we have different I think I should focus or kind of change this a little bit because there are two broad sets of financial statements. Okay, fund financial statements and government-wide financial statements. But really, your fiscal accountability is focused in on your governmental funds and governmental fund financial statements. But you can also have you will have fund financial statements for your proprietary funds and your fiduciary funds. Okay, so just be aware of that. So there's two broad sets of financial statements, but within this set of financial statements, some of these are using modified accrual accounting, some of them are using full accrual accounting. And then your government-wide financial statements, this is all only full accrual accounting. Okay, and so that's where your operational accountability comes in. Okay, similar to a for-profit entity. Okay, so another important thing is just this textbook will use the dual track approach, recording journal entries both at, let's say, the governmental fund level and then also at the government-wide level. And so, with a capital transaction, that's like buying a building or something like that, it'll be recorded differently. Okay, so or here they're issuing bonds, okay, to buy a building. All right, and so if we're doing showing how we're issuing the note in the general fund, then we're going to receive cash, okay? But because we don't carry long-term debt, our credit is going to be to other financing sources, okay? So it's not going to be to notes payable because that's long-term debt, okay? So that's in the general fund. And then for our government-wide, so this is a financial statement that we'll talk about governmental activities, but government-wide, so this is the same transaction, but just recorded two different ways. Not formatted perfectly in for this iPad, but we received cash. Okay, that was the same, but you can see our credit is to notes payable. instead of to cash. Okay. Let's see what else we got here. Okay, recording the building. So in our general fund, we're going to record expenditure. Remember, we use that only for our governmental funds at this point. So debit expenditures, credit cash, and then at the government-wide level, we record that fixed asset, the building, and credit cash is the same. So just see that that's where the difference is. Okay, so now what they test more than what the book shows on this. We'll do this in a future chapter, but reconciliation between the governmental funds and the government-wide financial statements. And so you'll see there are separate financial statements or financial reports to show that reconciliation, and you'll be required to do that reconciliation, where this textbook mainly just shows the dual track approach. We'll actually focus quite a bit on the reconciliation because it's tested pretty heavily. Okay, so we have management discussion analysis. Nice thing about that. So this is basically what's required reporting. That's also required in for-profit accounting, and so that shouldn't be anything new. Their financial statements are fund financial statements and government-wide financial statements. This did not format very well. This is over here. But fund financial statements are required. Government-wide financial statements are required. And then notes, it should just be this, notes to the financial statements. Those are also required. Remember, notes to the financial statements are an integral part of our financial reporting. Okay, don't think of them as something just separate. They are required. And then the last thing that's required is required supplementary information other than MD&A. Technically, the management discussion analysis is in required supplementary information. It's just that the MD&A comes first. Okay, and just to remind you what the MD&A is, it's just kind of a narrative by management talking about maybe new companies that came into town, or growth, demographic changes, different things that are happening within the local government. Okay. Oh man, this did not. Let me see if formatted well at all. I should went through. Sorry, I did this on the last one. Went through and fixed the formatting, but I didn't think about it this morning. So minimum reporting requirements. Okay, I already covered this anyway. MD&A, fund financial statements. We need to show our major funds individually. Non-major funds are shown in aggregate. Government-wide financial statements, you have a statement of net position, like a balance sheet, and statement of activities, so we'll show that. And then notes to the financial statements, required supplementary information. So some of the information that's included in here is the sources of changes in net pension liability, components and related ratios for the last 10 years, and budgetary comparison schedules. Okay, I think it just says in information. You have this PowerPoint. It's just called, what is it called? Government reporting. Okay, I'll make sure. I'll make sure that it's in module 2. Okay. There's some optional reporting. Could be other supplementary information, which is combining statements of non-major funds, variance between original adopted and final amended, variance between final amended and budget and actual, so some variance type stuff, and then annual comprehensive financial report. So this is what most governments are doing, but just be aware that it isn't part of the basic or the minimum reporting requirements, but it is what most governments are doing. It adds in an introductory section and a statistical section. So annual comprehensive financial report. Okay. All right, so government-wide statement of net position. Think of this as a balance sheet. Okay. So we're going to report economic resources as a whole, includes all assets, liabilities over which control or responsibility exists. So just recognize the fiduciary funds are not included in the statement of net position, because remember, that's not our money. That's just money that we're acting as a fiduciary for. Okay. And then component units are included. We'll learn more about component units later. We'll also learn more about deferred outflows and deferred inflows. But for now, just think of a deferred outflow as I'd use the word quasi asset, but maybe an easier term would just be like an almost asset. It's an asset, but not quite, has some different characteristics. So the format, if you look at this, we go assets minus liabilities equals net position. Okay, remember, your normal accounting equation is assets equals liabilities plus, it'd be equity, but we don't have equity because it's a government, so it'd be plus fund balance. Okay, so this is governmental. Okay, but for government wide, so think about the way I remember this. This may work for you, or may not. But the way I think of government wide, I say, okay, that's normal accounting, that's full accrual accounting, but the accounting equation is set up differently. Okay, so assets minus liabilities equals net position. So assets minus liabilities equals net position. Okay, whereas governmental funds, the accounting equation is actually set up the same, right? I mean, both of these equal each other, but just how they're set up, this one's assets equals liabilities plus fund balance. Okay, you'll see the deferred outflows and deferred inflows are in both. So, okay, infrastructure assets and depreciation. Basically, all this is saying is, formatting is not good on this. You'll be able to look through it though, but and we'll do actually I'll do a different slide. This really is more of an overview of financial reporting. So all this is saying is with infrastructure assets, think of like the Golden Gate Bridge or some bridge across the Mississippi River or something like that. Depreciation really doesn't make sense for that asset because it's going to last for a really long time, not indefinite, but it's going to last for a long time. And so what matters more is the condition of the asset and how much we need to spend each year to keep it in a certain condition. Okay. Now that doesn't mean depreciation is not allowed. Like we can still depreciate assets because there are some assets that make sense to depreciate, a police car or fire engine or something like that. But infrastructure assets, all this is saying is there's other reporting that's required now. Okay. So here's an example of a statement of net position. You can see we have our governmental activities and business type activities. This would be your enterprise fund. You can see that the internal service fund, it washes out, right? Because it's governmental activities and then internal service fund. So that because those are basically, this one incurs something and this one would, so this one, well, I guess it'd be opposite. If this one incurs an expenditure, then this one would have an increase in revenue and vice versa. So they wash out. So they don't show up, bottom line. So you have your governmental activities and business type activities and then component units. Like I said, we'll talk more about component units another day. So you have your assets. Notice, so capital assets. So we carry fixed assets, long-term assets. Okay. We also had deferred outflows. Remember, those are almost like assets. Liabilities, we're going to have non-current liabilities, right? Both current liabilities and non-current liabilities, deferred outflows, and then net position and how it's restricted. So capital projects, debt service, unrestricted. Okay, net investment, capital assets, things like that. Okay, statement of activities. So think of this similar to the income statement. Okay, or government, information about various functions, state and local government. Operating expenses are shown by function. Okay, so showing how we're incurring those expenses. Notice we're using the word expense instead of expenditure. So direct expenses are specifically associated with service program or an department. So we're going to show debt based on accrual basis. And then we have our program revenues. So service, operating, capital, grants, contributions, general revenue is reported. So you'll see the format is very different here. So remember this statement of activities is set up as expenses first, then our program revenues gives us net revenue or expenses, but then down at the bottom, oh man, this is not formatted well. Down at the bottom, right here, we'll just jump to here. This is better. So see our expenses, then our program revenues here, and then jump down here, we have our general revenues. And you can see this is where really most of the revenue is coming in. Up here, you know, these revenues here are not nearly high enough to cover all of those expenses. Okay, that's because most of our revenue comes from taxes, property taxes, franchise taxes, things like that. And then special items, realize this is something that exists. So we have special items and extraordinary items. Okay, so the way you keep these straight are both of these are unusual or infrequent. Okay, but special items are within our control. So if we sell some government building or something, that's unusual or infrequent, but it's within our control. Okay, and extraordinary is also unusual or infrequent, but it's outside of our control. So that's a hurricane comes through and destroys the government building or something. So this is within gov control. This is outside of government control. Okay, and so this is something, these special or extraordinary items, that's not something that exists. We don't have that designation in for-profit accounting anymore, but we still do have it in governmental accounting. Okay, then we have transfers, net position beginning, net position ending. So that's your general format. So just make sure you have this expenses minus program revenues equals net revenue or expenses. General revenues come down below, and then special items are below the general revenues. Okay, so that's for our government-wide financial statements. Now it looks like we're switching into governmental because it's saying balance sheet. Okay, so our governmental funds. So remember that's GDPSC. So balance sheet, and if you look in here, you're going to see there are no long-term assets. Okay, these are all current, and no long-term liabilities. They're all current. Again, there can be deferred outflows. In this case, there aren't any, but there are deferred inflows. So think of those as like almost like liabilities. And then we have our fund balance. So remember assets equals liabilities plus fund balance. And then the fund balance is divided into non-spendable, restricted, committed, assigned, unassigned. So try to have that down too and know the difference between those. Okay, and then here we have a reconciliation between the balance sheet and the statement of net position. Okay, so there are some things that are going to be on the statement of net position that aren't on the balance sheet because statement of net position carries fixed assets and long-term liabilities. So, and another, we'll focus a whole PowerPoint on how to do those reconciliations. Okay, this is also governmental fund. So revenues, expenditures, change in fund balances. And we go revenues minus expenditures plus or minus other financing sources uses gives us a net change in fund balance. And you can kind of look through this. And then again, we do a reconciliation. Okay. Statement of net position. This is for proprietary funds. Okay, so remember full accrual accounting. We're going to carry fixed assets, long-term liabilities, everything like that. Okay. Statement of revenues, expenses, and changes in fund net position. Okay, so this one here, because it's saying expenses, we know that they're using full accrual accounting. This is for proprietary funds. So just be aware of that financial statement. Statement of cash flows does exist for proprietary funds. None of the other funds use it. Government-wide financial statements. We don't have a statement of cash flows. Statement of cash flows, be aware it does exist for the proprietary funds. We have operating. You'll see this is a different order, and there's actually one more section too. So in for-profit, you go operating, investing, financing. Now we're going to go operating, financing, and you'll notice there's two financing. So there's non-capital, and where's the other? Non-capital and capital and related financing. Okay. So there's two categories of financing activities. The logic is here, non-capital financing. If we're borrowing money to build a building, that's fine. That doesn't violate interperiod equity, right? Because that building's going to be used for multiple generations. We'll pay off the loan over multiple generations, whatever. But if we're financing activities to pay payroll, that's non-capital. And that would be bad, right? That would be violating interperiod equity because that money is being used right now, but the benefit isn't going to extend out multiple generations. And then lastly, we have investing activities. So just remember there's 4 sections, and then we change the order from for-profit accounting, and we have non-capital and capital and related. Okay, so there's just a continuation of the statement of cash flows. These are just for Denver, Colorado. And then we have our statement of fiduciary net position. It's for our fiduciary funds. Yeah, you'll see almost all of this is related to pensions. Okay. So there are requirements here. We have to report our total pension liability, fiduciary net position liability. Okay. I don't know, pension, they moved away from testing on pensions very much. So I don't know if we'll go into that much detail on it. So here, we're talking about component units. So legally separate entities. So we have to include them in our financial statements. If it would be misleading that we take them out, there's fiscal dependence, financial benefit or burden, kind of same. And the voting majority is appointed by the primary government. I'm pretty sure that's what that says. So basically that's just saying like the component government is part of the primary government. There's more to that, but we'll go into it. So anyways, that gives you a pretty good overview. I'll post some more quizzes. I remember the quizzes are cumulative. They're going to continue to cover your modified accrual accounting concepts, and the stuff that the first three quizzes had. But then they're also going to add in some of this information. So appreciate you watching and keep up the good work.